Welcome to Trading the Markets, which is Joseph. We're here. We're going to talk a little bit about today and what it means as far as the market moving forward. If we're going to go back into the bear market and crash, and what we can play moving forward to be safe. Especially when the market is crashing, you got to know what is going up when the market is crashing because there's always a bull market somewhere. You know, but yeah, but look at spot today. So you see this candle? What is this? Is it the gravestone doji? What is this shit? You know?
Yeah, that's like an inverse hammer
Yeah,
doji kind
it
of
is. So
or dragonfly.
but so you see the struggle, right? But let's go intraday. Let's go on the 15. This is today. And you see I have my levels I was trying to play off of, but because it was so choppy, because today's spy was moving like this, I stayed away. I stayed away from the spy today. And mind you, this was Friday. Friday was a great day. Like this day on Friday, options that were 0 day went from 12, I think it was a 381 put, went from $12 all the way down to about 120 down here on Friday. So it was a very strong day on Friday. But you see, after a big move, the market likes to consolidate. Y'all see that? And that's something I noticed a lot. I don't know if you ever noticed that, Sid?
Yeah,
Yeah. So today was a consolidation day. It trended a little bit right here, but it really did a lot of up and down fake outs, a lot of false breakouts that I didn't take none of them because I didn't trust the market today. So I stayed away from it. So this is why it's really cool to know when especially in the crash, what else is moving up? What else is moving inverse? What else you could play? So I stayed in the gas, oil, and utility sector. So like one thing you could do is like I have basically I break up different things I look at. So let me move this over a little bit. Let me make this bigger. Hold on. So I break them up into different groups so I could watch different things in the market. So this is the sectors. So right here, you can see this is all the 11 sectors. Well, I have some extras right here. I need to erase, but right here up, it's all sectors, it's from XLC.
yeah.
And you can see most sectors is red. The only sectors that were up today was XLU, utilities, and XLE. So what did I play? XLE, XLU. So I played ET today, and let me guys show you guys my trade. Um, so I go back to top stocks, and I have it on this list, and I have to chop my list down. But this is today. This is ET today. So this is the 15-minute. So this is the beginning of the day. So this is how I played it. Actually, let me go to 5 minutes to show you guys more detail. So this is how I played it today. So first 5 minutes, it gaps down. So this was yesterday, right? Just so you guys can see, this was yesterday, right? So right here, this was yesterday's close. Let me make
Hmm.
a line real quick. I'll make a little array, a horizontal array. So right here, this is the closing price yesterday, right? So as soon as I see the gap, right, I know that I like to play gaps. And the way I play gaps is I look to see where the momentum is going. But the principle for gaps is that once the stock starts going towards the gap, it's gonna pull the stock like a magnet to fill the gap. You guys know what I mean? So
Yeah,
so basically, I was watching it and I seen, but mind you, this is the 5 minute. Let me break this down even further because this is happening really quickly. So first 2 minutes, right? Gap, right? Then it goes down, fake out, then it comes back into range. So it's not until see 2, 4, 6, 8, 10, 12 minutes that it finally breaks this little range. But that wasn't really enough for me. But once, honestly, I think I might have had alert somewhere in the middle in here. Once that went off and I seen it was filling the gap, I was like, all right, I need to get in there because the velocity of the price action, like look how strong these bars happen in a short period of time. So this right here, this is my entry. So once I seen that, it broke, it filled the gap and it kept going. I was like, I need parts. So
yeah.
I got in right here at 852, right? and I ended up selling. So as it was going up, I was selling partial selling contracts. I had 10 contracts. Matter of fact, I could show you guys. Do I have it up? No, I don't. I gotta go to I gotta go on my I have an online journal. I'll show you guys later. I have an online journal where I actually like it shows the time that I enter and all that. But basically this is at 8:52, and then I sold throughout this time, and then at 9:18 I was out of my full position. So you see it went up a little further, but then it reached a point where it came down. So the one thing I always think about when I enter is how much is left in the move. You know what I mean? So my first target really was 200. I was like, maybe he's gonna reject right there. So I need to like be ready with my stop loss, be ready with everything, whole time. So the way I do it, I don't put stop loss on everything. I put a stop loss on half, and then I'll leave half so I can just sell them as they keep going up. So basically I bought them for $7. So I can show you guys right here on Thinkorswim. So right here, so this is today. So look at this today. So you see that it started the day at $4 a contract. And these are 15 minutes. So 30 minutes later, it reached a high of 11, right? So I sold them mostly in this first, what was that, 45 minutes? That's basically when I sold everything. I don't know if I kept any. I don't think I did really. I think I sold everything at least by this red bar. So basically I didn't get in till 7. So I didn't get in till about right here. It was 7, you guys see, but the way I knew to get in, one, I've been playing this since last week. I've been, I won with it last week. I'm just gonna stick with it. It's oil, and I'm gonna tell you guys why oil is a winner in this environment right now. But the main thing was the way that I use my demo account. So watch this, guys. So you guys see this right here? A bunch of ETs. This is the stock that I traded, right? ET. So what did I do? I bought calls and puts on it, right? Why? Because I want to see which ones get clapped. So right here, I see these puts got clapped, right? But I also see these calls got clapped, right? So first of all, I look at the charting and I already know my direction is up, right? So I'm looking at the calls. So I look at these calls got clapped, these calls got clapped right here. Well, they're up today actually, because I think I bought these today. But since these are clapping, these are the ones I'm watching. I believe these was down to like what, $4, right? So yesterday these were like I seen they were down, and then I seen them start to move today. So when I seen it was $4 and it's $5 and it's $6, I'm like, all right, I know where it came from, so I know where it can go, but I know what happened to it. So I know that I was getting at a lows at a good price after it was proven to have gotten, really discounted. Does that make sense to you guys? Any questions? Everybody follow? No questions? Are you saying something I can't really hear? Yeah, but yeah, so that's that. So going back to the chart. All right here. So yeah, so that's how I ended up playing, basically playing oil. I realized that while the market was going up and while the market was going down, oil was still going up. Look at today. It went up hard even despite whatever was going on. It did go down with Friday though, but the point is, let me go back to this. All right, so all that, I don't know, is anybody able to read? Are they able to see this? No. All right, I'll just read it then. All right, so fear is back, right? But it's not panic. So maybe we're getting used to the VIX being lower than it was the last 6 times we saw volatility this year. So people thought we capitulated, but we didn't. There's still more to come. Mike heard you. Well, didn't heard you, but I understand. So yeah, fear. So basically, that's the main thing, because you guys seen from the market that the market's still like kind of choppy. It didn't drop like that, like you thought it would, especially following a hard Friday, a red Friday, such a strong red Friday. So it's more like kind of consolidating today. It still was a long wick on the daily. And pretty much there's more to come. Pretty much there's more to come, but the main thing is non-farms. So non-farms is like employment numbers and production numbers and all these other things. They're gonna be a driver, but the main thing is this week is there's going to be a couple of speakers. Like today, Brainerd, Fed President Brainerd spoke, but it was a non-event. It didn't really do anything. So for tomorrow, we have Fed Barkin and Williams, and then Wednesday we have Mester and Bostic, and then Bostic again on Friday. So maybe this week the market's going to listen to what the Fed has to say, because what's been happening is like the market kind of has been ignoring the Fed until Friday, I would say. If you guys been following the SPY and everything that's been going on. But that, that's really, so all that, I really want to, help you guys look at different plays and different directions on where you guys want to look during this time where volatility may increase. So let me guys show you the VIX. So if you guys notice, let me make this a solid line, right? Just to make it more clear. So this is basically the VIX for the year, right? All right. So right here, you guys will see that most of the year, because this is what 2022. So this is the beginning of the year. So you're gonna see most of the year, you see this red area, or a good portion of the year, because the year's not over too, we've been trading underneath 26. So understand this, the VIX measures volatility. So when the VIX is up, option premium is high. Options are more expensive. If you have them, they can move more, right? But when the VIX is low, preferably under 20, or really, that's like really low, but like under 25, I'll say, right? That's when options tend to be cheaper. So the last couple of months, as the market has been, rallying, options have become cheaper. Because at the end of the day, what this VIX is, it's a ratio between calls and puts in the whole market. So people have been buying less puts, but now there's starting to be more random spikes. You see, we're getting over the 200. Maybe we might start getting to high volatility again. When volatility gets high, the market is different. Do you guys remember how it was back in June? Or even, beginning of June, May, April. I don't know if you guys remember, but like the market was moving so crazy that like it's like if you bought an option, you wasn't making as much money per move. Does that make sense to you guys? Anybody could relate? Talk to me, y'all. Anybody? Anybody was trading during these times? Not really. All right. So yeah, anybody?
I wasn't.
Yeah, I was.
A little bit.
Go ahead.
Go ahead. You can speak. What do you guys?
I was driving, bro. That's why I had to unmute myself.
Oh,
But yeah, I was going through it right with you. Super big old move, and it go up $5. So yeah, I remember those times for sure.
So So remember, the market today is different from the market tomorrow, and it keeps changing. And if you're not changing, you can get stuck doing old things that don't work no more. So the main thing is we got used from July in a low volatility environment, and that might have spoiled some traders, because now we're gonna go back to high volatility where things are gonna get crazy again. So what I would recommend is right now is a good time to start buying options with time that could take advantage of some of this future volatility. So let's get into the plays. All right, so let me go back. So I got, let's see. So the plays I want to watch really is, I keep it really simple. So UUP, that's the way to play the dollar, but the real dollar index is the DXY. UUP is just an ETF that tracks it. I'll say actual dollar index. All right. Oil, and oil is an easy play. As a matter of fact, let me show you guys something, especially you guys that have been with me for a couple of months. CX. All right, oil. All right, we're gonna get into oil right now. All right, but first I'm gonna show you guys this right here. So some of you guys are part of my coffee and stuff like that, but like this is my coffee page, and this is where I have a lot of my plays and stuff that I drop, you know, call outs, options, you know. So this is an old one back in November 8th, right? So this is MRO, this is an oil play that I had shared. And you, as you can see back, price was $17, but we can just look at the date. Hold on. This is November 8th. So back in November 8th, I called the MRO and I said that the monthly chart looks very strong. We already hit double bottom on the monthly, and this is a stock that came down a lot, reclaimed the last liquidity from the lower areas, made new lows, and from there we were just building. And if you guys see this like staircase type of formation inside a channel, that's a very healthy growth. You know, when stocks just go straight up, they go straight down too. Like right here, you see it's unhealthy, but when it's like that in staircase, it's a healthy growth. So that's why I called it out, and I said that double bottom at 360. I talked about divergence on the RSI. It was diverging. You know, if you peep Sid, I don't know if you remember this, Sid, but we definitely charted this one. And then the ATR was moving about $1.27 a week. But I put some time on it. So I called out. So let's look at some of these options. Because mind you, they're about to expire like in coming weeks. So back then, the $30 call, September 16 was $59. The November 26, 17.5 call was 53. Let's look at what they are now, and they've probably been all over the place. But actually, let's look at both. So I'm gonna go to TD, and I'm gonna pull these up. So I did sell them. I didn't hold them all this time, but I did make my profits, if you were wondering. So MRO, $30 call, September 16th. We'll look at that one first. MRO, $30, September 16th, right here. And it's gonna be a $30 call. So right now, oil is down right now. So it's actually down right now, but let's look at where it's been. Copy. I'm gonna send it to here so I can watch it. Paste. And then now let's look at where it's been and how much profit you could have made off this. Let's go on the 1 year, 1 day. So as you guys can see, back in May, the option that was $39 was $570. You guys see that?
Yeah.
So mind you, I didn't wait. I probably sold it by here. I'm pretty sure I sold it by here. But still, to buy at 39 and sell for 200, 300, or even if you were patient enough to hold to 500, that's a crazy return on an option that you get to hold for months on end, where you don't worry about it's going down today, it's going up today. So this is the power of a long-term options and leaps. At the time, it was a leap. It had like about a year expiration on it.
Are these like you can put in a sale for like 6 months?
Yeah. Because you choose expiration. Because mind you, it expired September 16th. When did I post it? November 10th? Something like that. You know, so November. You know, so that's many months in advance. And it's only because I seen early activity on a larger time frame. I was looking at the monthly chart. Does that make sense?
Yeah.
So let me show you guys something. So like, let's say you want to know like, can you hold something for a long time? So you want to look at the larger time frame. So hold on, where is it? And then I'm gonna look at what you said CX, right? But hold on, share my screen. So let's look at what was the MRO? MRO, this is an oil stock, and I really like it. They're actually, I used to have about 100 shares of them at one point, and it did me well because I got in like a couple of times. I actually got this from BWO. Back, I was in this back like 2 years ago at $8, and it doubled up in a year. I think even more. But this is the yeah. Let me get into the bigger time frame. So the monthly. So you go on the monthly, right? And know this, right? When it comes to the bigger time frames, things hold up better, stronger on the bigger time frame than they do on the smaller time frame. Because the bigger time frame will tell you it's going up, but that's on the big time frame, the monthly. But then on the weekly, it's going up, down, up, down. But then on the day, it's going up, down, down. And you guys get the point. On the small time frame, it's just more variations to get to wherever we're trending. Does that make sense to you guys? Any questions?
Yes.
All right. So if you have the monthly and if you want to know like whether you should buy leaps on something, what I would recommend is going on beyond the monthly. So if you just type in numbers, you could change time frames. So like 12 is 12 minutes, right? But if I type in 12M, that's 12 months. So now every candle is a year. So to know if I wanted to buy leaps on this from the yearly chart, let's say the year just started, right? If I see that the year started at the highs of last year and it's pushing strong, then I buy leaps on it. Make sense? Then you buy long term because you know that long term the trend is probably going to keep going up. Make sense?
So basically, because you put it in this format, you can see a wider variation of it going up or down.
I'm sorry, I couldn't really hear you. I can't really hear you that clearly.
Can you repeat that? What you said again?
I was just saying that once you see that the yearly chart, because this is a 12-month, so every candle represents 1 year. Once you see that the year is above last year, that's a good sign that we're going to continue.
Okay. Gotcha.
But
Thank
if I seen that the last year that we opened up inside or below, then I know that I'm not going to hold this long term. Like let's look at NEO, right? Look at NEO yearly chart. So as soon as you see that we're starting to go below last year price action, you already see that this is not something to go hold long term. But
Thank you.
yeah, but MRO. So you look so what you could do now, you could break it down. So this is the yearly. So now you can look at 6 months. Okay, 6 months. Now you see that 6 months ago it made a high and then it came down a little bit. Then we can look at 3 months. So 3 months, this is the quarter. Now we can see, is this quarter higher, lower, or inside of last quarter? So we see that this quarter, it's above last quarter's close, but it still is inside the range of last quarter. So last quarter, MRO went up to 33. And at one time I had stocks at like 18. And that wasn't even that long. That was like a couple of months ago, So just knowing where the winners are is really, really important because once it hits a certain point, and right now, this is a stock that I believe is going to go back and retest these highs, especially as the oil is starting to go up and you see that so far the quarter is bullish. Now you can look at the monthly and then you could try to make, closer decisions on what you can do. But even on this, like the way that this monthly is moving, I can see us definitely retesting these highs. Because I feel like that, if you notice, oil went down last month when the market went up last month. So you see, this is the oil on the monthly. Let's look at the market. So the market went up and then now it's coming down. But that's basically one of the plays. So now what could we play? What could we look at? Because you guys seen the past. The past is not necessarily indicative of the future, but we can still learn from it. So certain plays you can look at, like I said, oil. Let me make sure I'm look at CX too. But MRO, even this short term, but for short term, I'm looking at it. I'm trying to see what's the best price I can get into. The same option that I predicted from back then. I can still see short term in 2 weeks doing something. But more long term, if you want to look long term, you should look at next year. You should look at the end of the year. So like January, some of these out the monies are not that bad. I have like 32, so you can get like a 32, not too far out the money for like 180, 190. If you want to go out the money, you can get it for like, how much is this one? It's a $45 call, but it has time where you could still make money if it goes up. But this is going for $40. And for $40, you could try to do the same thing again and give it time, and hopefully it'll appreciate. Anybody have any questions? Look at CX.
Did you get into any other of the DWO plays?
I did back then, like AIV, the crash puts, but a lot of them didn't really work out that well, to be honest.
Carnival Cruise, I knew it was gonna drop, but I didn't know how to put in for a sale on I think I was using Thinking Smart, but it dropped down from $20 to $9 a share.
Oh wow. Which one was that?
Say that again.
What ticker was that?
CCL.
CDL?
CCL.
CCL. Oh, was that Carnival Cruise? What's that?
Yep.
Yeah, Carnival Cruise. Yeah, I used to play them a lot back in the day, as you can see from my old markups. I used to like, so they went short. Wow, they dropped a lot. Wow. Like, and this is like, oh, this is 2020. Oh, I'm on the monthly. Let me go on the daily just to get a little, or I can go on the weekly. Let me go on the weekly to see what it's been doing.
I was looking at that in 2020 in December.
And like I see it's consolidating. So like I would like just put alerts like at support and see what it does. Like when it gets to these areas, does it bounce or does it break? Because if it breaks support, it could keep going lower. But it's like you keep going back and you look, you see this could be a place where it could bounce because this is a long-term double bottom in a way, or multiple bottoms where maybe it could bounce, But if it doesn't bounce, then it's getting lower.
Has the stock ever went from having dollars to 0 cents?
Yeah, that has happened. Hertz. You ever heard of Hertz? I don't know if you heard of Hertz, the car rental company. But yeah, they went to cents, and I think they got delisted because you can't stay like in cents for like too long. They like give you a deadline. But yeah, who's looking at so this is what play I'll watch to see, is it gonna bounce or is it going to break? So literally I can probably put 2 alerts right here. and depending on where it goes is what I'm gonna do. Does that make sense to you guys? I want it to break out of this zone and to go somewhere. I don't want to trade it while it's inside the zone. I want to wait, and then once it does something, then I can do something.
Can I ask you why you chose that zone? Like, why did you mark that zone? Is it because that was
Because the consolidation.
okay?
Yeah, right. Basically, the price action, the way that the price is behaving, it's balanced. I want the price to behave like this. I want it to shoot in a direction. I don't want it to be wishy-washy.
Gotcha. And so you will wait for it to break out of consolidation to know which direction.
Exactly. Now I don't have to guess. I don't have to guess. I can just react. You know what I mean? So you never have to know what the market's gonna do next to make money. You just gotta know how to react. Because this is a very important level, because in the past, you see this was a very important level, and you see that the market came down and it did double bottom, you know, but the market never came back this low. You know what I mean? So if the market wants, it can go back and claim that liquidity. Because you got to think of, one thing you guys got to know is that the market's always hunting for liquidity. Does that make sense?
Yes, it makes sense.
So either the market might want to come back and take this liquidity from down here, or maybe it's satisfied from taking this much. You know what I mean? Maybe it's satisfied. So then it's gonna go after the liquidity up here. Why is there liquidity up here? Because the people that got in right there have not been taken out of the market. Does that make sense?
Yes.
Yeah, so when you're marking up your levels, you want to look at because you have to, like I said, like you have to start looking at the candlesticks like they're people, and you have to ask yourself who's suffering the most and who is not suffering the most. You get what I'm saying? So it's like the people right here, they're not suffering the most, right? But it's not like, because we're in consolidation, not the best example, but still, the people who got in right here and they thought the market was gonna keep going lower, they're suffering. You know what I mean? So if anything, they're suffering the most. You know what I mean? So that way I know where the liquidity is. I'm dropping some jewels, guys. I hope you guys are paying attention. Got about 5 minutes left. You know.
Oh, I have another question.
Go ahead.
So, like Apple right now, would it be a good time to buy it, or is this another time to just wait it out? Because
Wait it out, because it's consolidating inside the zone. And when you buy options, there's something called theta that's going to eat at it if it's not going your direction or if it's just staying the same. You know what I mean? So I would, but mind you, this is a weekly zone, so it might be a little bit bigger on the daily. Let me see. Yeah, still stay out of the zone. Just wait. Like, look how long it just keeps going in this zone. Like, the only way you can play this zone is maybe like when it hits the top, you could sell it, but then you got to take your profits as soon as it comes down here. You know what I mean? So if you wanted to play this, but I would rather you not play it and just have something that you could hold, because you can't hold in here. You know what I mean? So the main thing is wait for the consolidation to finish. Once it breaks out of the consolidation, then it could pick a direction. Either it's gonna break to the top side or it's gonna break to the downside. And right now we're on a downtrend, so it could finally change. But if I had to lean one side, I would lean to the down. But I'm still gonna be flexible. I'm not married to one side, so I'm just gonna wait for it to either break the purple line or either break the green line. Can't see the other screen. Can you guys see my screen? I'll reshare. Anybody unable to see my screen still? All right, you can?
I can see it.
All right, cool. Yeah, so I was saying when we're inside this area of consolidation, mind you, I've been looking at the higher time frames because I was showing you guys options you guys could buy that's called leaps that you go for a year and capture the gains that I was able to capture on oil. So right now is a good time to look at oil and look at some of these plays, but a lot of these plays are really good down plays. And honestly, I love down plays. I love a short more than up plays because things go, it's like things take the stair up, but they take the escalator down, you know? So things go down faster than they go up, or the elevator down, I should say, not escalator, elevator, you know what I mean? So, you know, these certain plays, but this could be an interesting area because it could bounce up and this could be a great time to get in, or it could just keep going down. And that would be crazy because it hasn't even been this low. Like it's almost at all-time lows. Like, let me go to the monthly. Oh, all right. So it's been this low before. It's been lower than this before. So it could bounce. This could be like a nice double bottom type of bounce situation. So, but it could also break. Once if it breaks it, I'm definitely playing puts. Definitely. Yeah. So those are some, I know CX. Yeah, those are certain plays. CX. CX seems like it's gonna keep going down just from how it looks. Just from this long wick and this much rejection on the top on the monthly, it seems the downtrend is still winning. It's on the monthly, on the weekly. Yep, winning. We're downtrend winning on the daily. Yeah, so it might keep going down. Yeah, we're on a downtrend. But that's about it. That's all I have for you guys today. I showed you guys my coffee page, you know, these options that I showed you guys, my predictions, you know, from months ago, really netted a lot of return. Options that were 39.59 became 5.90. So yeah.
Can I throw something in there to the class real quick, bro?
Oh, we got like less than a minute.
Okay.
Yeah. But I'll tap in tomorrow though.
I was gonna say real quick, I suggest everybody do that what he said because I had a lot of problems doing the same thing, and it's so simple. Just wait for the levels to break or bounce, and then get in once you got confirmation. It's so simple, nobody could do it, but the successful people do it. That's all I want to say.
Appreciate it. Much love and respect. So tap in tomorrow, guys, and we'll continue.